today we want to discuss, as usual, the latest news in the blockchain, NFTs, DeFi, and crypto space. And I would say the biggest piece of news that came within this last week is this new ad guidelines by Google. They're the new ad rules, which affect literally everything that has to do with any sort of monetary exchange, the way I'm reading it. So basically, what Google is going to do is Google is going to revoke all the exchange certifications on August 3rd, which is a very, very short time frame. And for exchanges, for wallets, for DeFi projects, um, NFT exchanges, etc. And then you actually have to reapply and be approved by FinCEN, which is the Financial Crimes Enforcement Network, uh, because they're all considered by FinCEN as a money service business. Um, you have to have at least one state in the U.S. as a money transmitter. Uh, and alternatively, you can be a federal or state chartered bank entity. So you can partner with a bank in the US, could be chartered by just one state in the US to actually advertise your business on Google. So, what do you guys think? How will this, hi, Adrian, how will this affect
Hey.
the world we're in?
Well, to be honest, Google has not been very crypto friendly since the beginning. So when it comes to advertising on Google for any kind of crypto product in their ad platform, it's not very useful to begin with. Social media organic sharing has been the best: Reddit, Telegram, Discord. And then the Brave browser is pretty much wide open for all crypto advertising because it is a crypto platform. So, I think it's really interesting. It's going to scare off a lot of mainstream people just when they hear the news that Google is saying no to advertising by these people who are illegally money transmitting. And they're going to go, oh, exchanges are illegal money transmitters. Oh, I better not get into crypto. So I think it's a stall tactic for them to try and dissuade mainstream retail investors from even looking at crypto right now.
Oh, Adrian, you want to introduce yourself as well when you get a moment? We just finished our intros.
Oh, sure. Hi, I'm Adrienne Ashley. I spent 3 years teaching, traveling the world and teaching hedge funds and family offices how to do due diligence in blockchain. I was the number one woman in blockchain influencer in the world in 2019. I started doing NFTs back in 2015 before it was even technologically capable of doing it. And I have a naughty dating app for good girls that gets women laid and solves the Me Too epidemic by putting consent on the blockchain. So I focus on consumer facing blockchain applications that actually solve a problem. So I'm less on the investing side and way more on the let's drive mainstream consumer adoption because blockchain is the future and we need to get everybody on board.
So back to what you just said about consumer advertising, because this is your expertise anyway. I think what's really kind of interesting to me in this news release that came out of Google Ads, is not just the fact that they will not allow you to promote exchanges and wallets on Google if you're not actually if you're not certified by FinCEN, but they also expanded the definition of what all that means, what's constituted allowable and not allowable. So they clarify that ads for initial coin offerings, DeFi trading protocols, ads promoting the purchase, sale, or trade of cryptocurrencies or related products. Um, so, destinations that aggregate or compare issuers of cryptocurrencies or related products, like a CoinGecko, I would rate it.
CoinGecko, CoinList, all of those things. So what they're basically doing is so what they're not saying is they're not delisting those. So that's the key piece, right? They're not delisting those from the search results. They're just not allowing them to advertise.
Correct.
Right. So that means that whoever has a better SEO game, instead of paying $5,000 to $50,000 a month for Google Ads, is going to spend $5,000 to $50,000 a month on SEO.
Yeah, well, it's interesting though because I don't think they have these rules for other businesses.
They don't.
Um, you
We're
know,
being very targeted.
you sell pharmaceuticals. Are you registered with the Pharmaceutical Association of America? Like FinCEN is a US thing. So Google is definitely promoting a US first policy here, probably because they're getting yelled at the most from the US. But like Google.hk, probably the number one thing at all times is crypto.com, and Google.Malta, it's probably got whoever's domiciled in Malta is number one all the time. And there's no way they can do this by jurisdiction. So, I mean, I guess it's a make the legal auditor happy rule. Um, but how are they going to enforce keyword for something like, I don't know, what's a good keyword? IDO. I guess
Well,
that's
we'll
a
just
crypto thing, right?
yeah, an IDO, an IBO, but we're just going to keep changing the damn name,
Mm-hmm.
right? So that's all.
Your
We're
so
just going to
is
keep
your
changing what we call it. That's what we have to do on Facebook right now to not get banned. We can't use certain words, otherwise we get banned for 30
yeah.
days. So these
Well, so
platforms
let's talk about
are
you.
trying to stop the conversations. Yes.
So you have a token, right?
Yes. POPs,
In
proof of
your
personal
consent on
stake.
the blockchain.
Yes, I
Right.
do. Yes.
So that seems like a crypto business, right? That means you can't advertise as a dating app anymore. You're now a
I
cryptocurrency company. Like,
You
how? What do
can't.
you think?
You can't advertise as a dating app, and since I match based on sexual consent, I can't
Oh,
advertise anyway because
okay.
lordy lordy, somebody over there is afraid of women having orgasms.
So this is like a double whammy. Um, so interestingly enough, all the ICO pre-sales or public offerings, cryptocurrency loans are part of this list. Initial DEX offerings, token liquidity pools. I'm not kidding. Celebrity cryptocurrency endorsements. Um, it's unhosted
Well,
wallets. I mean, it just
Well,
goes on.
celebrity cryptocurrency, let's just quickly dive into celebrity cryptocurrency endorsements. First of all, 99.9% of celebrities do not understand securities laws. They have not read the legal opinion from a lawyer that says that this is a utility, not a security. Therefore, they're actually illegally promoting an unregistered security. They don't know it, and nobody has any idea how to use Google to look at what happened to Floyd Mayweather in 2017. It's like they're not learning from their past mistakes. And now they're all jumping on BitClout. And I'm like, that's an unregistered security. People, you're going to get in trouble. And my friends in the SEC are like, they're compiling a list of all the big ones. And the minute you say invest in my BitClout, it's like, boom, that's now a security. And we know for a fact, based on SEC rulings, you can take an actual utility, like BitClout isn't, but if it were, you can take an actual utility token and transform it magically into a security simply by the words you use. And only Rally is doing it correctly because they put their celebrities through a lot of legal education on what you can and can't say, and then they monitor them, and then they'll ping them and go, okay, that was really close to the line. Don't say this next time. Say it this way instead. And they coach them on how to not break the law. So if you're going to have a creator coin or celebrity coin, great, but they need training. And any celebrity that's like, well, isn't this just like like a Pepsi? It's a sponsorship deal, right? No, it's not. And there's this lack of education, and people are suckering in people with huge audiences and getting them to do illegal things without their understanding of what they're getting into. So I'm all for that. I think Google actually, to me, that's them protecting the celebrities. So I'm okay with that one.
So there is one thing that we haven't really talked about is the fact that it specifically states targeting the United States at the very beginning. Exchanges and wallets is targeting the United States. May
It's
advertise only when you follow these rules.
because
And
Google doesn't
so,
want to get in trouble with the United States legal entities.
correct. So, people like Binance.com, they're not supposed to be targeting the United States anyway. Binance.us, fine. They are already registered. They'll just update their little thing. So the big boys aren't going to have an issue anyway because they're already registered. They already are legal. They already operate in the United States, and they'll just check the box and send the stuff in. The small startup projects, like maybe Jason's project, has you know, people taking it up on the United States. Like I would imagine, Jason, you're advertising to the United States and there's a crypto component. So how do you read this?
Yeah, so, as you guys know, we went through that entire Regulation A filing and they accepted it. So, we have a really, really good understanding of this stuff. And first off, we're not going to be advertising cryptocurrency as a security. It's going to be actually advertised kind of like frequent flyer miles, as loyalty points will be the kind of the metric that you can use to measure this. But more importantly, we're not targeting the U.S. And ours is primarily focused on Asia, Africa, and Latin America. China mints 5 million STEM degrees a year. That's just China. India does 3 million. The United States only mints 500,000 STEM degrees a year. So for us to dedicate marketing dollars to the US scientific community is a big waste of money. Uh, so we get uh, a double pitch for our money, right? We get the Asian scientists, but they also understand crypto, and we're not worried about violating any securities laws if as long as we're not selling these things, and as long as we make sure that we have to reflag as a Swiss company. We've already got those wheels in motion, so we won't even have to worry about the U.S. coming across and saying, "Well, you're a U.S. based company and you're violating, regardless of whether people are paying for these things or not."
And you bring up a good point, right? And this is why I think it's kind of ridiculous for the United States to be the way that they're being. It's not like we don't have options. We have Cayman, we have Switzerland, we have Singapore, we have Malta. We're actually creating an entire island as a sovereign nation off of Haiti that is going to have the best domicile treatment for blockchain companies in the world. It's taking the best of everybody else and putting it all in one place. So the US, all they're doing is losing tax dollars by saying that. They're basically saying, no, we don't want to allow this. And so these potentially multi-billion dollar companies are moving to other countries.
Well, I think
I think
Adrian,
that's a lack of forethought.
there's it's even I totally agree. There's a lack of revenue, loss of revenues. But I think there's also this component of losing the technological development edge. And I don't think this will end at blockchain and cryptocurrency, or cryptocurrency with the US government. I think that there's a wheel underway to look at things like Facebook, to look at things like Google, Microsoft, these behemoth kind of tech companies. And there's this wave that's insidious moving through Congress to start dismantling these companies. They're comparing Google now to Standard Oil. So I'm fearful that the U.S. is not only going to lose its revenue opportunities here, but more importantly, they're going to lose their technological R&D as we begin to, as you know, capital recognizes no borders. As we begin to flood capital out, we also start to move our R&D efforts out of the country. And all we have to do is look where we're recruiting our blockchain engineers from, right? I mean, it's just a great example of that.
So, Mariana, sort of to volley that back to you. So, you talk to a lot of people who are investing in companies in this space. Have you seen a switch yet where people are only investing offshore because of these sort of policies? I mean, is now the money to be made in companies not focused on the United States,
Well, that's a
or
good
has it always
question.
been?
Yeah, that's a great question. I just read this article, this interview with Tim Draper, who is probably one of the most prolific blockchain VCs and probably VCs on the planet. And he was basically interviewed in India about all these efforts that Indian government had in stopping crypto investments and crypto trading and crypto businesses in general. And Tim's point here that I completely believe in is that The fundamentals for the businesses are there for the crypto businesses. The crypto marketplace has strong fundamentals. This is not going to change because, Elon Musk maybe tweets about Tesla not taking Bitcoin, or because one of the governments or many of the governments tried to shut down some of the activities. This will prevail. And then what he sees in the future is that, the consumers, the actual population of the country will have other options than to use the fiat currencies, and the market for the better, more fundamentally sound options will prevail. And I believe that. I believe in the free market economy, that it should be global and frictionless, and that's what provides value for everyone. So I don't see that investors are going to go away from the US companies. Unfortunately, the US companies had to be domiciled in other countries.
You know, yeah, I think that's true. You gotta wonder what's underneath the surface here of this policy change and how much political pressure Google is getting. I think there's a lot of political influence in Google um, in that we don't hear about, in congressional pressure, and they know that they're being watched. And I think their approach here um, may be more conservative. You look at what Facebook happened with Libra and how much sort of pressure is on Facebook and Twitter, and Google doesn't want to be the next guys to to get the news. I think to some extent, it doesn't mean that this is pro capitalism or a good idea. I just do wonder how much foreshadowing we're seeing in terms of the political tea leaves from this move.
Yeah, and
Yeah,
you
it's
look
interesting.
at, go ahead, Scott.
I was going to say they're, based on the wording and what you just said, the being conservative with their statement, if you target people in the United States, then you must X. Does that mean that if you're not X, you will never show up in the United States, full stop? Or you'll just say, look, I'm not targeting people in the United States. They just showed up. I didn't check the box that said United States. I mean, so there's like an interesting out because these advertisers have to click the box of which geographies they're targeting. But I think you can leave that blank and it just goes to whatever natural search results come up. Um,
That's
they're not
that's
filtering
interesting,
away
and
from the United States.
yeah, and essentially, I guess what you're saying is we don't know. I, Someone might, but I don't know what the algorithm impact is of having a product that is advertising in Brazil and getting tremendous click throughs, and how that impacts the sort of visibility of that organic product in the United States. But there has to be a relationship there, right?
Yeah, I think so. Mariana, you have thoughts on that?
Yeah, so I think what's really interesting here is that it's a Google global policy. So it applies to every company globally. And, Scott's point that if you're targeting your advertising to the US consumers, you have to comply with this, but it is a global policy. So, you know, the interesting thing that I see with this is that if this policy came about in 2017 or 18, after the first ICO run up, it would have had like crypto exchanges, crypto wallets, maybe cold storage and cryptocurrencies. But now you have another, 30, 40 categories here listed. And so I kind of feel for them. I don't even know how are they going to track all these categories. How are you going to say this is actually an aggregator of crypto information? How do you prove all this and track it and then stop it from being advertised? It's very interesting.
It gets pretty complicated for all of the pitchforks and shovel companies in this space, and there's a lot of meshing together occurring. Like I'm concerned about how security companies get lopped into this that are adding to the ecosystem. It can be quite punitive and discriminatory against the whole industry, if depending on how they handle this. And I think people are getting really token centric. There's tokens for everything. I heard Kylie Jenner is going to have her own token um, soon, and like like the I just see this like overwhelming um, waterfall of influence and power from independent producers and influencers who can shift brands and shift advertising power. And I think it could be really detrimental to Google's future. I have quite a few friends working on products that compete with some of the services of Google, and I'm pretty bullish on those ventures.
I haven't written about this yet, but I have this treatise whereby I don't believe Facebook and Google and Microsoft and Twitter that these guys are going to sit around and continue to allow this very ancient U.S. Model to dictate their movement into the next century. And so I suspect that we're going to see those guys revisiting crypto. And I know Facebook took it really hard, but they were the pioneer, and sometimes they can revisit that. My sense is that one of these guys is going to do it. And here's the curveball: the U.S. government doesn't have a choice because of the Chinese yuan coming along. They run the risk of becoming irrelevant. And so what I think they could do is nationalize one of these cryptocurrency plays that come out by one of these large social plays, and solves their digital dollar and gives them this huge base of immediate users of this new nationalized digital dollar. That is the wild card in the entire mix. And they could use national security uh, tenants in order to justify that.
Yeah, and Tim Draper in that interview with an Indian magazine, tech magazine, also said something to that effect that Facebook's cryptocurrency initiative, which is still up and running, although not a lot of partners are in it, and then Chinese government's cryptocurrency initiatives, etc. Many of those may succeed, but he believes in the decentralized currencies, like Bitcoin, Ethereum, and bunch of others, coming with layer 2 protocols. So I'm with him. I feel that decentralized um, offerings are just stronger in so many different ways.
Yeah, there's an interesting correlation here with, I'll call it this mini correction that we've seen over the last month. It wouldn't surprise me, with this whole Wall Street bets world and crypto market going from what, 6,000 to 60,000 in the last 18 months. There's probably a lot of people who went all in who did very poorly, and they have complained to their local senators that they were taken advantage of, just like they did, oh, I got taken advantage of by this ICO. They said they were building the next Google, and I believed them. Some of it is law because people don't believe in buyer beware. But I almost think that some of this could be a good correction. Like it's kind of good to stop the fraudulent ones, and it's good to stop the tokens that aren't doing anything. Like it's good to not allow them to be targeted to the people who don't understand it. And one thing is very true is people in the United States don't understand any of this. As a general society, they buy it on Robinhood and hope it goes up, and then if it doesn't, they don't know how to sell it, and they don't know where to put it, and you can't even get rid of it. So
That
it might be an interesting good thing.
that is, you make a really good point. Robinhood is not crypto. Robinhood is a custodial right to a certain percentage of how much stuff Robinhood owns. But you can't actually change it, you can't exchange it. At least on some of these other custodial exchanges, you can exchange your Ethereum for something else. On Robinhood, it's like a stock. You buy it, you sell it, back to fiat, always calculating those capital gains. So sorry to
Yeah,
interrupt.
and no, it's okay because Like, I think that's kind of what people just want. They don't want to have to figure this out. We go down the rabbit hole a lot, and I've talked about this before. I play in the Binance Smart Chain every once in a while because I'm trying to figure out how the dang thing works. And there is so much front running and so much collusion and so much whales, and pick a term to describe all these things. Somebody launches a project and it goes up 1,000,000% in 2 days, and then it crashes back down, and that's millions of dollars in real or fake money that was gained and lost. Is that okay or not okay? Maybe these little, hiccups are a good corrective measure to try and rein in a little of the weirdness, because a Wild West decentralized world, of course, we don't want. We want a reasonably controlled set of good participants in a decentralized world, right?
Well, Christian, you want to comment on this and introduce yourself as well?
Sure, yeah. I think most people at this point in time know me. We are a blockchain investor. I've been in the space for a long time, teaching in the space for a long time. We're focused on disruptive finance solution and the larger space of what people call Web3, which I personally call Web 1.0. And so maybe to respond to some of the last comments, and that's partially based on my background. So I'm a software developer initially, and then I became a lawyer, and now I'm obviously neither. Haven't been neither since like 2020 years ago when we sold our first company. But the larger point here is it's a total fallacy to think that you can obviously regulate blockchain or cryptocurrencies. No one should be talking about this at all, because code regulates itself. Code is regulated by code at the end of the day. And the larger point here being is if you look at this as from the paradigm of building Web3, and all blockchains are kind of a one layer of Web3 that's being built right now, then at that point in time, what regulation do you apply, right? So, and regulation doesn't apply to technology, it applies to citizens within their jurisdiction. So it's utterly useless to talk about these points at all. That what's important to realize is that all of these things are legal technologies. They have to just be built correctly. And my standard go-to example in this context is this typical example of KYC. The point here being is Bitcoin for its intended purpose is obviously dead, as in now we got most Bitcoin sitting on regulated quote unquote exchanges, so they're custodial exchanges. So the herd immunity of Bitcoin is entirely gone. There's a big list of blacklists that you can't send Bitcoins to, otherwise cryptocurrencies to, otherwise they're going to get locked, they're going to ban your account and so forth. And there's lots of coins being stuck on custodial exchanges, including some that I own. But the larger point here being is if and when and where we build the correct technology to actually implement the objectives of these laws and regulations, KYC being one of them, which is just a whitewashing term within the larger context of anti-money laundering. At that point in time, you actually only attach PII, personal identifiable data, if, when, and where that's required by court order or law. Because anybody on the call right now, if you look at your last 1,000 transactions that involved your checking account, your demand deposit account, will probably notice that none of those deserve to actually divulge your personal identifiable data at all. So now we're building the primitives to actually only do this when that's required by law. At that point in time, the legacy implementations of these dragnet approaches of doing KYC, at that point in time, this should be illegal. So that's the larger point. And we unfortunately have gotten on kind of to this topic from the wrong foot, from the asset side. The asset side being these digitally native assets. We have hardly touched there now real world economic activity because of that friction. The larger point here being is that we need to build the quote unquote identity stack. And that's actually the agency attribution layer that allows you to actually interact with real world economic activity. The very simple example that everybody should be familiar with, if you have an avatar in an in-game environment and you're trying to pick something up like a gold coin or take possession of a house, you can only do so if your avatar has the necessary slots for that. And that doesn't exist yet. So that's being built right now. So this whole like talk about cryptocurrencies, and I have not been very popular of saying chances are that the number of cryptocurrencies we need is somewhere between 0 and 1, is probably largely unnecessary. Because if and when where we have the technologies to actually build the agency attribution layer, at that point in time, it really doesn't matter what kind of unit of count you see on your currency, right? And that's the other important point to understand here, that the unit of account is really the remaining function of your fiat. because everybody manually already mitigates against the loss in purchasing power. It's now just the case that we could, in theory, do this automatically, right? You could automatically move into something that's non-inflationary, and people obviously already do that. We have been doing this for years. Anyway, I'm going to stop the rant here and let others chime in.
It's fascinating what's going on with the crypto markets right now. Based on that sort of coordinate system, that everything's going to be frictionless and on the same technological layer at some point. But at the moment, it's as decentralized as it gets. So there was a big ransomware attack by the meat producer JBS, confirmed on Sunday, and today, the White House wants to better evaluate ransomware attacks and track crypto payments to threat actors. Would this mean more stringent cryptocurrency regulation coming down the pike, or we kind of applaud these efforts because they need to be done?
So it's an interesting topic you brought up. I just finished a podcast episode with Anthem, the CEO of Soft, and we were just talking about that same issue where, in a lot of ways, the bad actors have the upper hand with sort of the limitations of the hardware industry versus software. Software is beating hardware right now, and I think that some regulatory discretion in that area is probably prudent to help us catch up. All these flash loan attacks and DeFi and these things, ransomware stuff. I think the bad guys are ahead right now, and and we need to sort of change the course there. It's unfortunate because we're all rooting for the industry and innovation. But it does feel to me, at least, that right now we have to sort of create some sort of, we have to close some of these gaps temporarily. We can't have all these ransomware attacks, and it's too easy right now, and it's too lucrative.
So if
I have
you
to go ahead, Scott.
go,
Sorry.
Jason. No, you go.
My point on this one is actually pretty simple, in that our political establishment is extremely technologically out of step. They're not digital natives. We're sort of, at our age, we're sort of the outliers. Most of the people in our age group and up, they're just completely disconnected with what's going on technologically, and they're struggling constantly. But I think these ransomware attacks are changing the consciousness in the political establishment about the entire ecosystem that must occur digitally. And so I have a friend of mine, just as an example, he still uses DVDs, right? Doesn't even understand what Netflix is. So I think that to condense it down, I think what we're going to see is a deeper need for Congress to catch up. And I think that catching up is actually going to benefit us, because we all know what happens when people start to learn something new. They get excited about it.
Yeah, I mean, the larger point here is, so it's not so much that politicians, quote unquote, need to understand technology, because this will always take much, much longer anyway. And even most technologists within our space don't understand the paradigm that's being developed right now, the Web3 paradigm, because the larger problem is really database technology, period, full stop. My expectation is that within the next decade, and hopefully much sooner, we simply see the use of database technology being outlawed for certain type of information, i.e. personal identifiable data. Because from a regulatory perspective, there's nothing to protect, right? That's an exercise in futility. It's the technology that you need to develop. So PII should only exist as cryptographic primitives under owner control. That's pretty obvious at this point in time. And this goes back to the overarching architecture of the internet right now, in which all human beings are simple oracle functions that spew out data that the network collects and responds to. This paradigm needs to be reversed. And that's unfortunately what even most people in blockchain still don't understand. They're within their own little silo of whatever application they're developing, not understanding where it fits into the larger architecture of the actual web that's being developed for the first time right now.
So what you're saying is that the biggest problem is the centralized network that the ransomware attacked than the decentralized network that distributes the payment.
Well, the larger point there being is you don't want to create a surface structure to begin with, right? They're all honeypots. Every database is a honeypot, and the largest failure is always the human being. Most hacks are actually social engineering hacks, right? It's much easier to engineer a person into giving you a password or something than actually to penetrate a database using code. And that's happening on a daily basis everywhere around the planet. So the only solution to that is simply for people not to have access to data that they shouldn't have in the first place. So in the future, my expectation is that corporations at large will simply avoid to store this type of data because it's simply too dangerous, right? It simply creates a honeypot, and we will actively invest into companies that go after these honeypots and make it their business model to eliminate these honeypots. Right? Companies that today are data brokers, and I always include Google and Facebook in these companies, they need to be put down. Right? They shouldn't have existed in the first place. The internet at large is a commons. It's the best utility we have as human beings to discern and decide on information. And unfortunately, now when you Google something, finding out whatever is the best for you, the best cell phone plan, the best healthcare plan, etc. All you're getting is advertising. Even the information that's not labeled as such is still advertising. So that should have always been to the original domain space, which is a .com.commercial main space, right? So that we let this fester to this digital landfill that we call the internet today is a real shame. And that's at large what we're fixing right now with these cryptographic primitives. And again, blockchain are one layer to that, but they're one layer. And tokens at large, again, they're part of an open source software stack, and it's a little bit of an MMOPG at the moment, albeit with a lot of real world money involved that plays in that space. But then again, if you look at Tesla, for example, it's a meme stock, right? It doesn't deserve the valuation that it has based on business principles. It's a meme stock. But so are most stocks. They move on momentum, right? Those are not real markets in that sense.
Mariana, you're an expert in NFTs in the entertainment, digital content space. I have a question that's been kind of gnawing at me. Is as these folks begin to try to create NFTs around their content, maybe utilizing it as a DRM, right? What Scott and I were talking about not too long ago. How does that community segregated across the horizon for who's accepting them, who's learning about them, and who's just saying it's a fad, I don't understand it, and I'm not going with it? Can you give me a sense of what that looks like?
Well, it's good that you asked that question, Jason, because our third article is about NFTs offering alternative revenue source for Asian musicians. And let's just look at that one entertainment marketplace, which is Asian music, right? It says that more than 50% of Chinese musicians don't make money from music itself. This is true of almost any country on the planet. They have to find other forms of income. And this particular musician, he's a Hong Kong based singer songwriter, Han Jin Tan, sold out his NFTs in just 1 minute on Thursday, earning him $200,000, which is a new record for Chinese language music industry. And he had 77 pieces of NFTs, which each had 27-second MP4 of a brand new song with a music video, and it was limited, kind of release, and each cost seven Binance coins, BNBs, which are at about 300, maybe $50 today, but were as high up as maybe 650. So that's where they get, total sale was about $200,000. So for someone who is a musician, filmmaker, a talent that even is cast in some of the major shows, The actual revenue model in Hollywood went from bad to worst with streaming, with broadband, mobile, etc. And so the the real issue here is when streamers came along, whether it's Spotify or Netflix, 95% of the revenue went to the streamers, and very little percentage of the revenue actually gets trickled back to the content owners. And so these new decentralized offerings like an NFTs marketplace allow people to catch up with some of the revenue generation directly to the fans. And so this NFTs mania is never going to stop. It is not the main business model change in the entertainment industry. I would say the consensus blockchain ventures will change the industry itself at the way that Christian is describing, centralized versus decentralized offerings. But NFTs will be a big part of the revenue streams. I hope that's what you wanted to know.
Yeah, I was also wondering about at the executive level, at the investor level, the folks that are turning the wheels at the strategic levels. Are they tuned in? Are they looking at it? Or are they just saying, we don't understand it and we don't think it's going to have an impact? It's a fad.
Oh, I'm getting calls from everyone I've ever met in entertainment and sports, and everybody's trying to figure out what their positioning is with NFTs, which they shouldn't be thinking of that alone. They should be thinking of consensus blockchain ventures and how to create, a DAO within their industry, because that's what creates value. But NFTs are part of the revenue generating equation.
Thanks.
There's a interesting thing. I look at this as an outsider who is not a musician or a band geek, or I don't have any fans who would buy my own NFT. So I'm not popular. So I can't go sell my NFTs because that requires in many cases pre-existing popularity. And almost what I heard you say is the concept of an NFT and a blockchain and its capabilities moves that hockey stick forward for people. Because rather than being a starving musician for 10 years and then selling an NFT for 200,000, you can maybe have that be 1 or 2 years as you're sort of building a grassroots community as you then get more and more awareness. What nobody has figured out yet, and it's quite a big hurdle, is how to get mass market appeal or non-crazy community appeal to a lot of these folks who are sort of paving the way. A lot of the big artists have exposed it, but I haven't heard of any the crypto NFT native. I don't know, what do you call somebody who started right now and they're 18-year-old artist and they've never released anything other than on Audius or NFT music, crypto music native or something. Like, is the world going to change for them? Or are they still going to need a producer and a label? And are they still going to need a tour? Or are they going to do it all in Decentraland?
Well,
Like, there's this huge 25-year sort of pause between the two models, I think.
Well, that's the thing. How quickly will that develop that you're describing? That's really the point of it, isn't it? Because all along, and Jeanette, you should introduce yourself in a minute here. We spent our careers in digital media trying to help artists create business models that would allow them to, feed themselves and their families with their art. And we were not successful, with the centralized structure of the databases that Christian describes, and centralization of the streamers, etc. We were not able to provide that to the artists, and we all collectively on this call have been passionate about that. So with the decentralized network, with a direct relationship with the consumer, you can see how artists who actually can manage both sides, the creative side and the business side of the business, will definitely succeed, even if they're starting out and not necessarily well-known artists today. If they have a brand, it's an easier translation for a brand to, provide the value. Deb, you had a question?
Yeah, I jumped up here like 20 minutes ago, so I'm going to do this rapid fire. Mariana, and yeah, can I just briefly ask, the article list that you're referencing throughout this conversation is posted where?
Sorry, which list? Oh,
Oh, yeah. I was just curious because I think you referenced a couple articles by now, and I was wondering if there was a stack, a
we
list.
don't really have a site with all the art. Maybe we should do that. That's a great
Yeah.
idea. Our site is www.infiom.com.
Hmm.
And we also host Infiom salons on Zoom every other Wednesday. Not
Hmm.
today, but next Wednesday from 12:30 to 1:30. And what I will do is I will cite the articles because I can't do it on, on Clubhouse. You can get them in the Zoom chat, or you can get it on our site before the Clubhouse. Or you can subscribe to our newsletter, which is also on our site. It's an AI powered newsletter. So if you're interested more in NFTs, you get more NFTs articles. And if you're interested more in DeFi, you'll get more DeFi articles, etc.
Yeah,
So
you got it.
good point.
Um, yeah. So Scott, real quick, I think it comes in the form of well, I'm really trying to do this rapid fire because I got pinged in
Yeah.
10 minutes ago, so I'm late. Okay, rapid adoption looks like AirTag, because AirTag's interface doesn't require there to be words. It's just you boot it up, you find lost item. I think that's what the low bandwidth users of this world need. So
Hmm.
there's even an obfuscation layer where they don't even care about the tech, or I mean, I don't want to do that. I don't want to shield them from actually learning about that kind of thing. But um, okay, that's what market adoption I think looks like. And then finally, Christian, I'll be down in Los Angeles. It said Newport Beach on your Twitter, so that's the information I'm basing this off of.
Yep.
Next week, yeah, for a gallery, and so I'm coming down from like Silicon Valley, South Silicon Valley area, and we should meet because I'm working on
Sure.
hardware.
Yeah.
Yeah, sweet. I followed you on here. But yeah, I got a meeting with Draper tomorrow, and then I have to send in an application by Friday. But regardless, we should still meet, and because I think with respect to hardware in this space, there's a really wildly awesome opportunity.
In the wallet space, or in what particular NFT space?
Uh, yeah, I have to jump. So just with respect to, well, I mean, it's just on my profile, so take like 2 seconds to tap it, and then I got to jump.
Okay. Thanks for that. Jeanette, you want to
Awesome.
introduce yourself?
Sure. I'm Jeanette DePatty, a woefully failed classical musician and wildly successful text-planer. And we're talking about music and NFTs. And I think there's kind of a chicken and egg thing going on, right? I think when there was a time where being a YouTube star was about having to being famous outside of the platform, and then a lot of native platform sort of geniuses started showing up. And I think it's going to be the same with NFT, that initially, sure, people who have popularity outside of these spaces and platforms are going to have a huge advantage. But I don't see any reason why this shouldn't follow the same trajectory of so many other technologies, and native artists are going to come up through this space. That's just my thought.
And also, there's that supply chain management component that Christian talked about before happening in the film business. There's a company I spoke to today called Film Chain that actually tracks film and television product through NFTs. So it's almost like registering, your script with a Writers Guild, or your production with a Producers Guild. Now you can basically register your existence of your product through an NFT issued by Film Chain. They do other things, like royalty um, um, components for each of the productions, et cetera, et cetera. But this is just part of their offering, and I feel that definitely the NFTs are going to be used in variety of applications beyond just talent using them, right? So they're going to be film, television, music applications with NFTs, far beyond releasing something new product, new film, new television series, but also integrating the user into that whole experience. And that would be like a whole nother layer of complexities in building those out.
Yeah, I think that's really true, Mariana. And I think too that the whole idea of content licensing is going to change due to this structure because there's a strong incentive for it to change. I think artists are very unhappy with the percentages that they get for their original content. Content creators that are including music or art or sound effects or things in their own content are very unhappy because they're paying enormous amounts of money for a lot of this licensing, most of which is going to somebody other than the creator of the original art assets. So I think there's a real strong incentive for that royalty free licensing situation to change.
Yeah, I agree with that. What do you guys think about centralized versus decentralized organizations? Like the fact that, a Binance is a Binance token is definitely trending up higher today and reaching new heights, where Ethereum and Bitcoin are sort of slowly coming back. What do you think of this whole idea that a centralized company like Binance is doing so well compared to all of these DAOs?
So it's actually really funny. They'll say, yeah, they may have a lot of control over how it operates, but they're not responsible for what people do with it. So they're talking out of both sides of their mouth, because there was a huge number of articles coming out recently about all the people being defrauded by how easy it is to launch something on the Binance chain. And Binance is like, yeah, we made it easy. Like, do your own research. So I think it's interesting how they're trying to solidify on a central stack that's easy to adopt, almost like already operational Linux, versus they're centralizing the decision making. Because it takes you like less than 10 minutes to create and launch your own token on Binance Chain, and then some bots will buy it 1 second after that, and you'll make $10. Um, so is that a good thing or a bad thing? I don't know, but I don't think the word centralized really applies. Maybe central control or central authority or central technical owner, but I don't think centralized is the right term.
But it's managed by a corporation versus a DAO, basically, right?
Sure, but what decisions do they make other than stop or start the nodes? I guess they could. I mean, there's no economic model of it to change. Like, so, um, uh, your point of it, being a group of people who have the best interest of everybody in mind, I think is maybe the DAO philosophy versus something that's in the best interests of a corporation. Like, I think those could be interesting philosophical differences and debates. I don't really know that there are very good examples yet of DAOs making good critical decisions. Um, those are fun debates to have over alcohol, but the centralized model, when you're trying to make something work, I think works a lot more often than it doesn't.
But then you think of Ethereum is a DAO, and all of these different, layer two companies on Ethereum are DAOs, and they just changed sort of the flavor of the way that they're developing the network in order to solve XYZ problem. And that was good enough to, create a Polygon or some other layer two offering. Don't you think that those are more, they're faster developing because of the actual entrepreneurship in inside these DAOs, and ability to get a consensus for something that just makes more sense, for the good of all people in essence versus just for the good of a corporation.
It's a really good point. On the flip side, you could argue that they're 2 years late making these decisions because it took them so long to work it out. And when, from what I understand, like the Casper story, like they were supposed to be the method to move forward a couple of years ago, and it took so long that they had to make their own way. Where a single decider can be like, okay, we're going to do this now. Might be a good, like, this is the whole, is it a good decision or bad decision? My personal experience is that the decision happens a lot quicker. Maybe not as innovative. So that's a really bad con, I think.
Yeah, and it's really going to kind of show us as time goes on, who are the winners. Is crypto.com going to be a winner? Is Binance going to be a winner? And does it make sense that, structuring organizations in, the centralized way, like we always have, like the Googles and Facebooks of the world, that makes more sense for this space, or these DAOs, these true innovations in the way that everything is being done, these true open networks where you are truly contributing to the economy and being paid for your contribution. And therefore, it's almost like a cult for you, in terms of your dedication to the network. Is that a better way to incentivize developers and technologists and all the other stakeholders? Or is it, a centralized version of it where you get paid by, some sort of centralized authority? So it's going to be interesting to see what prevails.
Totally agree.
Well, in order to end this on time today, I'm not going to ask yet another question. I want to thank all of our presenters for participating. Everyone, we have a very interesting virtual Infiom Salon next Wednesday. It's from 12:30 to 1:30, and it is going to be on Zoom. So please look us up on Eventbrite. It's called Virtual Infiom, just like this, the name of this a club, INFIOM. It's a virtual salon. It has 4 presenters with some Q&A, and then we finish Q&A after the Zoom portion here in the clubhouse. So we host these clubhouse discussions every Wednesday, 1:30 to 2:30. And if you want to join the club, you can follow me and I'll add you, or you can request to join the club and I'll add you there as well. So thanks again, everyone. Have a wonderful rest of the week. And if you're in Miami, enjoy the conference.
Ciao.
Thank
Bye.
See
you.
you.
Thank you,
Thank you.
Mariana.
Thank you.